Kenya is often described as one of Africa's fastest growing economies and is frequently mentioned as a future emerging market success story. But the real question is, does that growth actually translate into something investors can access? Why does Kenya matter? Kenya is one of the most important economies in East Africa. It serves as a regional hub for trade, finance, and technology. Kenya's top export destinations are led by Uganda, Pakistan, the Netherlands, Tanzania, and the United States, while its top import sources are China, the UAE, India, Saudi Arabia, and Malaysia. This ties Kenya to both regional African trade and to Asian supply chains. Kenya stands out because Nairobi has strong digital connectivity, a dense startup and innovation ecosystem, broad mobile money adoption, and a relatively deep financial services base for East Africa. U.S. government trade guidance describes Kenya as East Africa's leading tech and innovation hub, while Kenya's own innovation reporting highlights Nairobi as a major entrepreneurial center. On the finance side, the Nairobi International Financial Center explicitly markets the city as a Pan-Africa financial hub. With a population of approximately 57 million and a growing urban base, Kenya plays a central role in the region's economic development. This isn't just a frontier market, it's a regional anchor. Kenya's economy is more diversified than many frontier markets. You have agriculture, services, tourism, and increasingly, technology. Kenya's signature agricultural commodities include tea, coffee, cut flowers, fruits and vegetables, horticultural products, dairy, livestock, maize, wheat, and sugarcane. Kenya's service economy includes finance, transportation and logistics, tourism, information and communication technology, wholesale and retail trade, professional services, and business process outsourcing and IT-enabled services. One of the most important developments, mobile money. Platforms like M-Pesa, operated by Safaricom, have transformed how people transact. M-Pesa turned the mobile phone into a wallet as a small value electronic payment and store value system accessible from ordinary phones. It allows people to send and receive money, store value, pay bills, and transact without needing a traditional bank branch. That has helped normalize digital payments and push financial inclusion far deeper into daily life. Kenya isn't just growing, it's innovating. Let's talk about the local stock market. Kenya has a functioning stock exchange, the Nairobi Stock Exchange. As of the Q2 2025, there were 65 listed companies trading on the exchange. Companies listed represent banks, telecommunications, and consumer companies. Compared to many frontier markets, there is more liquidity. In fact, the bond market is much more liquid than the equity market, and the equity market is fairly thin by global standards. The Nairobi Stock Exchange is investable, but the equity side is still relatively illiquid and concentrated in the top 10 companies, making up a large share of the share turnover. While the average foreign investor participation is up from 38% in the first quarter of 2025 to 46% in the second quarter of 2025, foreign participation is still somewhat limited. Where is the opportunity? In the past 10 years, Kenya's population has grown from approximately 48 million to 57 million. Of the population, approximately 30% of the total population resides in urban areas. Combined with the adoption of technology, the population is becoming much more urbanized at a quick rate. Few frontier markets combine growth, innovation, and regional influence the way Kenya does. Kenya's growth story is real, but it's not without structural challenges and risks. So what are these risks? In fiscal year 2025, total public and publicly guaranteed debt stood at approximately 67% of GDP. Compared to other advanced economies with debt to GDP levels above 100%, the growth of emerging and frontier economies depends on fiscal discipline. Kenya's main fiscal pressures are high debt service costs, persistent revenue shortfalls, political resistance to tax hikes, reliance on domestic borrowing, and crowding out of private credit. The IMF has stressed that credible fiscal consolidation is central to addressing debt vulnerabilities, and recent World Bank reporting has highlighted how debt and domestic borrowing are squeezing private sector credit. In the past 10 years, the local currency, the Kenyan shilling, has depreciated approximately 30%. All this said, how do we get into Kenya's stock market? Currently, there are no pure-play Kenya instruments. The VanEck Africa Index, ETF, currently has approximately 4.89% of net asset exposure to Kenya. There are other funds that trade. However, they are all Kenya-based. To get exposure to direct Kenyan securities, you'll have to go to a local broker or financial institution to open an account. Kenya sits in that middle ground, accessible but not fully integrated into global markets. Kenya represents something many frontier markets don't, a combination of growth, innovation, and regional importance. But growth alone doesn't guarantee investment success. The question isn't whether Kenya is growing, it's whether that growth translates into returns for investors. If you're interested in deeper analysis on frontier and emerging markets most investors overlook, consider subscribing. This is Frontier Market Intelligence,